right, ladies and gentlemen, all eyes are on gold and Bitcoin because capital allocators are trying to figure out what the heck is happening all around the world. Creative Planning's Charlie Bolello highlights, Charlie writes that gold now accounts for over 20% of global central bank reserves, but now a lot of the data is pointing to it's probably going to be Bitcoin's time for the next couple of weeks.
Hey everyone! So we've all been watching this market take a pretty rough tumble lately, and wow, people are getting seriously bearish out there, aren't they? But here's the thing I really want you to understand. There's so much more happening beneath the surface right now. You've probably noticed how money's been flowing out of Bitcoin and straight into gold. And when gold starts heating up like this while Bitcoin's cooling down, that's when things get really interesting. Now, is gold getting support from other factors too? Absolutely. I've been diving deep into gold for over 2 years now, and I've been telling you guys to consider both gold and silver alongside your crypto holdings. Why? Well, going all the way back to 2022, we've been talking about this inevitable reset coming to our financial system. And when that happens, you want to be holding real assets, right? Gold and silver, they're like your financial insurance policy. Stable, safe, and perfect for the long haul. But here's what's really wild. Countries around the world have been stockpiling gold like crazy, and central banks, they're buying up massive amounts. That's putting serious upward pressure on gold prices. But you know what? Regular investors like us, we always chase the shiny new thing. And right now, gold is that exciting story everyone's talking about. That's pulling a ton of money out of crypto, and those liquidations we're seeing, they're just making it worse. Speaking of bearish sentiment, retail investors hit peak pessimism around the 10th, right when this whole downturn started. And we're still riding that wave down. Here's something that'll blow your mind. Traders are now saying there's only a 20% chance XRP hits $4 or higher this year. Just 20%. Can you believe that? People have completely lost faith that XRP can reach these key price levels. And that right there tells you everything you need to know about how bearish everyone's gotten. Not just on XRP, but on crypto as a whole. All right, so here's something really interesting that just came out from Cointelegraph. They reported that XRP crossed $2.50 after retail investors basically threw in the towel below $1 and $1.90. And you know what that means? Classic peak FUD territory, which, if you know anything about contrarian investing, screams buy opportunity. Now here's what's fascinating about this whole situation. Yeah, the market's been swinging all over the place since then, but the real story here is all about sentiment. And boy, has it been ugly. When you look at the sentiment data, the positive versus negative feelings people have, it's pretty shocking how bearish retail investors have gotten on XRP specifically, and crypto in general. I'm talking massively negative here, folks. Here's the thing that really gets me. Most regular investors have just completely given up on crypto at this point. They don't want to hear about it. They don't want to talk about it. And they definitely don't want to listen to anything happening in this space. And why? Well, when you look at those price charts day after day, they're basically screaming, "Be bearish." It's like the market is telling everyone to pack up, forget about crypto entirely, and jump ship to, you guessed it, gold. And honestly, that makes sense because gold has been absolutely crushing it lately. It's been riding those waves like a pro surfer, while crypto's been getting tumbled around like a washing machine. Okay, so check this out. We just got some wild data from Cryptos R Us that's gonna blow your mind. The M2 global money supply is absolutely exploding right now. I mean, we're talking crazy growth here, folks. And when I say crazy, I mean the money printer has been working overtime lately. But here's the kicker, and this is absolutely historic. Gold just became the very first asset in history to break through a $30 trillion market cap. Let that sink in for a second. $30 trillion. That's a number so big it's hard to even wrap your head around. This is literally unprecedented territory we're talking about here. And if you look at this chart, you can see gold is absolutely going bonkers right now. It's just flying up like there's no tomorrow. But here's where it gets really interesting. Bitcoin is sitting there, ready to follow gold's lead. And trust me, Bitcoin always catches up to the M2 money supply and gold eventually. We just don't know exactly when that's going to happen, but history tells us it's coming. And you know what's funny? All those altcoins are just sitting there like, hey Bitcoin, you go first. They're literally waiting for Bitcoin to make the first move before they do anything exciting. Now, some people might want to deny this, but honestly, the breakout is inevitable. I totally agree with that sentiment. At some point, We absolutely have to catch up to where gold is right now. I know, this probably sounds frustrating because we all want to know exactly when this is going to happen, right? But here's the thing about trying to predict timeframes. It's like trying to predict the weather 6 months out. There are just so many variables that can throw everything off course. The when is the tricky part, but the if is pretty much a given at this point. I mean, think about it. We could get hit with a total black swan event out of nowhere. Or maybe Trump drops some major tariff announcements that shake everything up. Heck, this whole trade war situation could escalate way beyond what anyone's expecting. But here's what we need to keep our eyes on. Bitcoin has this pretty reliable habit of following the M2 money supply. It's all about liquidity, right? When that money starts flowing into these markets, it pushes prices up. It's like adding fuel to the fire. And then there's gold. Oh my goodness, gold has been absolutely skyrocketing. I'm talking straight vertical on those charts. For the past couple of weeks, it feels like gold is all anyone wants to talk about. Retail investors have been laser focused on it, and honestly, can you blame them? So, while all this is happening, think about it. We could get hit with a total black swan event out of nowhere. Or maybe Trump drops some major tariff announcements that shake everything up. Heck, this whole trade war situation could escalate way beyond what anyone's expecting. But here's what we need to keep our eyes on. Bitcoin has this pretty reliable habit of following the M2 money supply. It's all about liquidity, right? When that money starts flowing into these markets, it pushes prices up. It's like adding fuel to the fire. And then there's gold. Oh my goodness, gold has been absolutely skyrocketing. I'm talking straight vertical on those charts. For the past couple of weeks, it feels like gold is all anyone wants to talk about. Retail investors have been laser focused on it, and honestly, can you blame them? So while all this is happening, the big question everyone's asking is, has gold finally topped out? Honestly, it's really tough to call right now, but here's what I'm thinking. I expect gold to eventually get boring again. You know how it is with markets, right? What's hot today won't stay hot forever. And when gold starts losing that excitement factor and people get tired of talking about it, that's when Bitcoin should absolutely explode. I'm talking go completely crazy, off the charts kind of movement. It's like a seesaw. When one gets boring, the other one steals the show. And whoa, did you see what just happened to gold? It absolutely crashed. We're talking a massive 6.3% drop, which is the biggest single-day plunge since way back in April 2013. That's over a decade ago, people. But get this, they wiped out $1.75 trillion from gold's market cap in just one day. I mean, that's an insane amount of money just gone. Now, this was yesterday's action, but here's what's really interesting about all this. Gold had been absolutely red hot for so long. We've been talking about this for weeks, right? So a massive sell-off like this, honestly, it was kind of expected at some point. But here's the part that's blowing my mind. Suddenly, gold is getting hit with serious volatility. For years and years, all we've heard is, oh, crypto's too volatile, crypto's too risky, you can't touch that stuff. And now we're watching gold swing 6%, 7%, even 8% in a single day. It's absolutely wild to see the so-called safe haven asset acting more like, like crypto used to. The tables have completely turned here, and so Anthony Pomp just dropped a video that caught my attention. He's basically saying, look, gold has been absolutely crushing it this year, but we all know past performance doesn't guarantee what's coming next, right? And then he drops this bomb. It's time for the great rotation trade, moving capital from gold straight into Bitcoin. Now, before we get too excited here, let's be real for a second. Anthony Pomp is a hardcore Bitcoin maximalist. Always has been, always will be. So we've got to take this with a grain of salt, you know? But here's the thing, I actually agree with him on this one. I really do think we're going to see a major shift from gold into Bitcoin. And here's what's crazy, it doesn't even need to be some massive exodus. We're not talking about 100% of gold money flowing into Bitcoin, or even 50% or 25%. Even if just a tiny percentage of that gold capital rotates into Bitcoin, we could literally watch Bitcoin rocket from $100,000 to $200,000 in no time at all. That's the power of how much money is sitting in gold right now. So definitely listen to what he's saying in this video, and then I'm going to break down a few key points that I think are super important here.
All right, ladies and gentlemen, all eyes are on gold and Bitcoin because capital allocators are trying to figure out what the heck is happening all around the world. Now, the narrative coming into this year, 2025, was that gold is a great asset. That's true. But it does a better job of preventing losses in your portfolio than it does driving outperformance. Gold didn't go up a lot. It was just really stable. And so that's where Bitcoin came in. The decentralized asset was pitched as a digital gold, or what I've previously called gold with wings. The idea has been that Bitcoin boasts the same sound money principles as the precious metal, but Bitcoin's unique properties, those include the finite supply, the Bitcoin halving feature, and the relatively young life since inception. Those unique properties, they should ensure that Bitcoin would continue outperforming gold. But here's the thing, that hasn't happened in 2025 though. In fact, gold has appreciated about 60% year to date. That is the best performance in nearly a half century. Gold bugs are celebrating. Creative Planning's Charlie Bolello highlights, gold is now the best performing major asset class over the last 20 years. It has an annual return of over 11% during that time period. So this performance, particularly the performance this year, it has driven central banks' allocation to gold significantly higher. Makes sense. Prices going up, so the allocation goes up. Charlie writes that gold now accounts for over 20% of global central bank reserves. That's the highest share that we have seen in nearly 3 decades. Now, this central bank demand is important because it overcame the fact that U.S. retail investors, they've been doing the opposite. They have essentially been net sellers of gold and silver since the big rally in price started in March of 2024. But here's the part of the story that is confusing many investors. Bitcoin and gold have historically traded in tight correlation. When gold goes up, Bitcoin has followed approximately 100 days later. These two assets benefit from the same exact tailwinds of higher national debts, undisciplined monetary policy, and all of the geopolitical uncertainty. Now, in response to these issues, investors prefer to allocate larger percentages of their portfolio to sound money assets. That makes sense. They've been doing it for a long time that way. Assets that are outside the legacy system and assets that no one can create more of. So why is gold responding to the recent global developments, but Bitcoin has lagged? That's confusing a lot of people. Is it as simple as central banks have a lot of money, and so they're the ones that are driving gold to outperform because those large pools of capital are not allocating to Bitcoin yet? Well, sure, that's part of it. I think that people see that happening in the data. But there's something more nuanced at play here. What I see is that most people are too focused on gold's outperformance, and they're forgetting to check Bitcoin's relative underperformance. Joe Carlsar shows that the current Bitcoin bull market has significantly underperformed past Bitcoin bull markets. We haven't seen the breathtaking price appreciation that we've come to expect. That means that the market has been void of the blow-off tops that are driven by the retail frenzy. That's not fun. If you've been buying Bitcoin for speculative purposes, especially if the most attractive quality was its perceived asymmetry, you've been pretty disappointed right now. And I wouldn't blame you. I get it. Bitcoin has not delivered on the promise so far in this cycle of the speculators. But if you're buying Bitcoin as a defensive asset, buying it to protect your purchasing power from currency debasement, and buying it to protect yourself from out-of-control inflation, then you likely have been good with the results. See, here's the thing. Bitcoin's up 1,500% since January 2020. The asset has appreciated more than 18% in 2025. The asymmetry of Bitcoin came from the high degree of risk that investors were taking when they first bought the asset years ago. You get paid for the risk that you take. But Bitcoin's not risky anymore. It's very obvious to me and everybody else. Bitcoin's not going away. The government is not going to outlaw it. And Bitcoin will eventually seep into every sophisticated investor's portfolio. So you should expect Bitcoin's return to come down from past bull markets. This doesn't make Bitcoin unattractive at all. Instead, it means that Bitcoin's rise is essentially preordained at this point. It's going to take time, but Bitcoin is going to win on the global stage. It's going to win as one of the top stores of value assets. Gold's going to do well alongside Bitcoin as well. These two assets are not in competition with each other, but rather they serve as brothers in the fight against currency debasement. And that's a good thing, because coexistence actually means that both assets are going to win together. But in the short term, we may have hit a turning point this weekend, and this is really important to pay attention to. We are most likely about to see a large rotation from the gold trade into Bitcoin through the end of the year. Yao Wedson writes that bottom signals in the Bitcoin to gold ratio are extremely rare. They tend to appear during high volatility moments and sharp Bitcoin drawdowns, like we just saw. Well, we're exactly there right now this past weekend. The blue signal in this chart marks the current bottom, which is revealed by a normalized oscillator that's basically screaming, time to sell gold and buy Bitcoin. The green signal on this chart is even stronger. It shows up when both metrics align at their lows, and historically, those moments have been the best Bitcoin to gold opportunities ever recorded in the history of Bitcoin. So Yao's message is very simple. He says to the institutional gold accumulators, if he were you, he'd take a close look at the chart. The risk-reward profile of Bitcoin looks far more attractive right now, especially considering the current gold euphoria. So you can use this chart however you want, but mark this moment. It could be remembered as the turning point between gold and Bitcoin. So there you have it. Gold, the precious metal, has done very well in 2025. No one is disputing that. But remember, past performance is not indicative of future performance. We may be on the doorsteps of the great rotation from gold to Bitcoin. And if that theory comes true, well then Bitcoin is likely to have a fireworks ending to the year. So don't look in the rearview mirror. Look through the windshield. It was gold's time. But now a lot of the data is pointing to it's probably going to be Bitcoin's time for the next couple of weeks.
Now look, whether you're buying into what Anthony is saying or not, and by the way, he does back up his points with some solid sources, here's what really matters. Let's just stick to the cold hard facts, okay? It doesn't matter if someone's a Bitcoin maximalist or a gold bug or whatever camp they're in. At the end of the day, we need to look at what the numbers are actually telling us, right? So when we dive into the recent performance data, and Bitcoin versus gold, we absolutely saw Bitcoin shoot up while gold took a nosedive. All right, so let me show you what gold looks like on my screen right now. And wow, gold is still way overcooked. I'm talking seriously overbought, especially when you look at these higher time frames. Check this out. Even on the weekly chart, it's telling us that gold isn't even close to being oversold yet. Not even in the ballpark. And you know what that means? This sell-off we just saw? It's probably not over. We're likely going to see gold drop even more from here. And that's where things get really exciting for Bitcoin. All that money flowing out of gold has to go somewhere, right? But here's where it gets absolutely wild. Bitwise just dropped some mind-blowing numbers on us. They're saying that if just 5%, and I'm talking only 5% of gold's capital rotates into Bitcoin, Bitcoin could absolutely rocket to $242,000 and beyond. Can you believe that? Just from a tiny 5% rotation. And that's not all. They dropped some other major bombshells on us too. At the current levels we're looking at, okay, so check out these absolutely insane numbers. If we just get a tiny 1% rotation from gold to Bitcoin, we're looking at Bitcoin hitting $134,000 plus. A 2% rotation? Boom, $161,000. 3%? We're talking $188,000. 4%? $215,000. And remember, we're only talking about rotations in the 1% to 5% range here, people. We're not even getting into the crazy territory of 6%, 7%, 8%, 9%, or 10% plus. Just think about how absolutely bonkers that is. These are such small percentages, but the impact on Bitcoin's price would be absolutely massive. Look, here's the bottom line. We're finally starting to see gold sell off, and that's huge. Whew. Now, we don't need some crazy repeat of what happened back in 2020 for this to work out. All we really need is for gold to get, well, boring again. Think about it. If gold just starts trading sideways for a few weeks, maybe a couple of months, that's all it takes. Remember that period from our April low until we started breaking out? That was roughly 120 to 125 days of pretty much nothing happening. And you know what? That boring period was actually setting us up for something amazing. 10. So if we get that same kind of timeline from our current high, we're realistically looking at around February 2026. And honestly, that timing is absolutely perfect. That would be the ideal window for Bitcoin to go completely ballistic. Plus, that's when altcoins typically start leading the charge too. It's exactly what Cryptos R Us has been telling us all along. When gold starts going down, that's when we see Bitcoin take off, followed by all the altcoins jumping in. And honestly, that would play out absolutely perfectly. This is literally all we need to see happen. We don't need some apocalyptic crash where gold gets completely destroyed. Nope. All we need is for gold to get boring again. We need that initial sell-off, which we already got, by the way, then maybe it drops a little bit more, and then it just starts chopping around sideways. You know what I'm talking about? We need the RSI to get that full reset. Look, we saw this exact same pattern play out right here in the past. We got that complete reset, then it just chopped around for ages before breaking out again. So we're looking for that same thing. A complete reset here, then chop, 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 and then boom, full breakout heading into 2026. Or maybe it just keeps chopping around for a while longer while everything cools off. But here's the key point. I really believe gold is going to get boring again. And yes, I think it's going to keep selling off too. And when that happens, retail investors are going to start looking around for other places to put their money, right? Are they going to jump into stocks? Well, let me show you what stocks look like right now. If we pull up the weekly chart here and clear everything off the screen, look at this! The RSI is getting pretty cooked right now. This could easily set us up for a big sell-off in the S&P 500. And here's what's really interesting about the timing. If we flip over to Bitcoin on the weekly chart, Bitcoin just recently reset right back to that midline. So even if Bitcoin keeps dropping from here, maybe we see it crash all the way back down to around $80,000, that could actually set up the perfect storm. Because once we hit that bottom, all that money rotating out of gold and into Bitcoin, that's going to fuel an absolutely massive reversal to the upside. And that's when we'll see the RSI probably chop down a bit more during this sell-off, and then, boom, we get that massive push to the upside straight into overbought territory. And that's what's going to signal Bitcoin's ultimate topping point. Now, that's assuming everything plays out in a perfect world, right? We've got to take this one step at a time and see what actually happens. But I'm totally on board with Anthony here. I really do think we're going to see this massive rotation from gold flowing straight into Bitcoin. It's going to be epic when it happens. And here's the crazy part. That massive rotation doesn't even need to be some huge 20% or more. Just 1% to 5% is all it takes to kick off Bitcoin's next incredible rally and send it rocketing back up. So there you have it, folks. I hope you found this breakdown as exciting as I did. If this video helped you see what's coming next in the markets, smash that like button, hit subscribe, and definitely turn on those notifications so you don't miss any of our free content. And hey, if you want even more insights, you're absolutely welcome to follow me on